Hello everyone, welcome to SFC Market Exclusive. Japan has battled economic stagnation since the late 1990s, and the Bank of Japan just ended its negative interest rate policy, marking a historical shift away from an aggressive monetary easing program that was implemented years ago to fight deflation. At the same time, we see Japan's Nikkei index continue its record-breaking bull run. To understand the implications, we had the opportunity to speak with UBS Chief Japan Economist Masamichi Adachi. Welcome, Mr. Adachi. Before we dive into the big move of the Bank of Japan, let's start with the broader picture. Japan's economy appears to be on the path to recovery. What are some of the positive factors and potential challenges along the way?
Yeah. So looking back the Japan's history of, say, last 3 decades, it's a quite tough time. As you may know, that Japan experienced a big asset price bubbles in the second half of the 1980s, and we got the bubble bust at the beginning of the 1990s. And since then, we call the time era as a lost 3 decades. And these 3 decades, the last 3 decades started after this asset price bubble bust, and then we got the banking crisis at the end of 1990s, and we got the global financial crisis in the mid 2007-8, and we got the big earthquake in 2011, and then we got the big political turmoil in 2009 to 2012. Then after that, we got the so-called policy package called the Abenomics, which is a combination of super monetary easing and the flexible fiscal policy and the so-called growth strategy, which promoting the private investment through the structural reforms. But through that time, we saw, the very unique situation of the economy, which is stagnation of the nominal growth. When nominal GDP was basically flat for the last 3 decades, and even with this very powerful policy tool by the Abenomics, couldn't change the dynamics. However, we got another big shock coming to the all over the world. As you know, the pandemic. The COVID pandemic made a very different dynamics of the global environment, especially the inflation after the the peak time of the pandemic, reopening effect of the global economy, especially in the US and Europe or many other places, the demand picked up. Especially with the huge government subsidies to the ordinary people all over the world. Then we got another shock, the war between Russia and Ukraine. So what was the consequence on that is a big inflation globally. And that's translated into the Japan as well. So we got the big rise of the import prices. Then we got the higher CPI inflation. So this higher CPI inflation, initially, many people thought, oh, this is another cost push inflation we experienced as a case in 2006-7 when the energy prices, oil prices went up to the $100 per barrel or something before the great global financial crisis. So we often say that this is a cost push inflation. Therefore, this is rather deflationary because the higher import prices meaning for our country is the loss of the national income because it's a so-called the terms of trade deteriorate. Therefore, we thought that this is a rather negative shock again for Japan. However, it was a big difference happened in 2023. We got a big jump in the wage growth. Wage growth didn't pick up in 2006-7 when the import prices picked up. But this time, we got the high import prices with the reopening effect in the domestic demand. So we got the higher demand and the higher input cost shock, which made the people, we need higher wages. And the corporate actually pay the wages. Therefore, we experienced a big jump of the wages starting from last year. So that time I found, oh, this time may be different. Then this dynamics of the wages and the prices is probably rolling over. Then this year, I mean, as you may know, that the last week we got the big surprise on the so-called Shunto. That's a spring wage negotiation outcome, which boosted the wage growth for this year. It's amazing that we saw two consecutive years of their big wage growth, which we have never experienced for last 30 years. So now we are seeing that economy is eventually growing in a nominal term. I call this transition from nominal stagnation to the decent nominal growth around 3% I call it the nominal renaissance. So the key challenge for Japan and the BOJ, Bank of Japan, is the success of this nominal renaissance. This is my understanding or my explanation of what's going on for compared to the last 30 years. However, I have to emphasize other things as well. We have at least two secular challenges. One is the demographics. Our total population shrinking 0.5% per year, and our working age population is shrinking a little bit faster than that. And we are experiencing aging as well. So this is a huge burden for the macroeconomy. And second challenge is definitely elevated government debt, which link to this aging society as well. So these challenges we have to overcome with not only the higher nominal GDP growth, but we also definitely need another reforms on fiscal and other economic structures. So as I mentioned, our biggest challenge for us is, of course, the success of this nominal renaissance, but we have to have another success of reforms in fiscal dynamics and demographic dynamics. I stop here.
Bank of Japan just ended its negative interest rate policy. Will it hinder Japan's economic recovery? Are you confident that BOJ has sufficient space and wisdom to balance YCC with inflation and effectively manage the economy?
I'm more confident than before that this dynamics is manageable because the BOJ ended this yield curve control, negative interest rate policies, and the quantitative and the qualitative easing, bunch of the so-called non-traditional policies packages are all now done. And the biggest surprise and the biggest success, I think, from the perspective of the market, policy perspective, is there's no confusion in the market. It's a rather smooth transition from very extraordinary policy package to the very standard policy of just targeting a short overnight rate and giving a guidance on the bond purchases. Of course, bond purchases is still not the traditional when you think about more than 20 years ago, but the last 20 years, many central banks in the Fed and the ECB and many other central banks doing the same thing. So I think now quantitative easing is a sort of already traditional policy, but this standard short-term policy, short-term rate and bond purchases, this policy framework is much easier to manage. And also, I have to emphasize that the BOJ's communication is getting much simpler because policy tools are more simple, meaning that the communication to the public and the market is much simpler. Therefore, I think it's compared to, say, 2 weeks ago when the BOJ continued such a aggressive policy. I think the BOJ's, market and the BOJ feeling more comfortable to have a, sort of normal game of the market.
So what do you expect the interest rate to be by the end of this year?
Yeah, our base case is expecting 0.25% at the end of this year, but after 15 basis point hike, 0.15% hike from current 0 to 0.1 in October. That is our base case. However, if the week end above 150 against the US dollar continues through the next couple of months, I think the BOJ may raise the rate to the 0.25 in July or even June. It's possible. So in case BOJ raise a rate in June or July, then October comes next. So end of the year could be at 0.5%.
Japan's Nikkei 225 stock index continues to hit new records. What does it mean in terms of investors' sentiment and for Japan's economy?
Yeah, I mean, that's definitely a positive factor that in Japan, the so-called wealth effect, which is the consumers spend more when their asset value increases, is probably not so high because not many people have equities. Only 10% of the household have equities. Therefore, wealth effect is probably less than many other countries like the US. However, still, the higher equity prices is sort of encouraging for many people, and especially corporate are feeling quite comfortable to, to catch up with this higher equity prices, high stock prices. They have to do more. I mean, they have to do new job, the new businesses or new services to improve their profitabilities. Therefore, that will encourage the economic growth, I believe. And also, I can tell that we have a public pension system which has a huge pension funds, and these pension funds, about a quarter of their asset is the Japanese equities. So the value of the asset of these pension funds increase mean that our wealth is increasing. So basically, higher equity price is encouraging for the whole economy. But only the problem is whether this is sustainable or not. And we hope that's sustainable, but if that's collapsed, then we get in trouble. I mean, that's another asset price bubble we have to tell in 5 years later or something.
Indeed, some people worried that Japanese stock market is currently in a bubble again. So do you believe the strong rally can be sustainable?
It's a very good question. I mean, if someone asks me that question from overseas, especially in the US, I ask them, do you believe that the SP 500 keep going up? Because I believe that the Japanese equity market or even European or any other markets, they continue to rally because US market is rallying. And the US market, are they really sustainable or not? It's debatable, right? As you know, that the rise of the stock prices in the US is very skewed to the AI related. Some people call the AI bubble. Maybe AI boom or AI bubble. We are not so sure on that yet. And as you know, that the Federal Reserve of the bank in the US, is now hinting to cut the rate based on the assumption that the US inflation slows to the 2%. But if that is not the case, then their rate cut will be delayed or even no rate cut through this year. That means that the financial condition will deteriorate rather than improve, which is a baseline assumption for the whole financial market. So, and the US economy is quite fragile, as you know. The interest rate is quite high relative to the past, and household balance sheet is rather stretched, and the banks are now tightening their credit to their consumers. So I feel it's a narrow path that the equity market in the US and the whole world continue to rise, say, next 5-10 years. I think someday we need to expect some corrections. But the issue is this correction will be huge, like a global financial crisis in the 2008, 2009, or some more normal correction of just a 10% or something. Then if it's a 10% and we get the sort of normal recovery with the Fed rate cut, then I think we can tell that the uptrend of asset prices will keep going in a sustainable manner. But if the crash is significant, then we are in trouble.
So what would be the best strategy for investors in the current Japanese market?
I mean, I'm not a strategist and I'm not a guy who can recommend any investment transaction. So I can tell just a general comment. I mean, you monitor the development and pay attention to the what's happening in the world, and be agile. Agile means that you should be flexible. Don't bet on something in a very risky asset, but at the same time, don't be too complacent on putting money in the just cash, because inflation is getting higher. But probably not in case of China though.
At the same time, Mr. Buffett raised his investment in Japanese trading houses. What opportunity did he see? Will the inflow of foreign capital lead to possible risks of stock market volatility?
Yeah, I mean, as you know, the Mr. Buffett invested into the trading companies in last year, I mean, spring of last year, and the global market participants recognize, hey, this is a great opportunity to pay attention to Japan and what is the trading companies and so on. That's a very unique time that the attention from the international investors returned to Japan. So for the first time since 2013. So it was very interesting. But for me, it's hard to tell why he invested into the trading companies. I know that I understand that he or international investors pay attention to Japan with, because as I mentioned at the beginning, Japanese economy is probably seeing a big shift of no nominal growth to the higher nominal growth. It's Japan's idiosyncratic positive factor for the equity market. Inflation is back. That's the one thing. And on top of that, we got still, even the BOJ decided to end the aggressive policy. It doesn't mean that they are tightening. They are still accommodative, and the real interest rate is still quite a huge negative. Therefore, yen is weak, and weakness of the yen is translating into the higher profit of the exporters. So, and as you know, as I mentioned before, U.S. market is driven by the tech companies, and that's linked to the Japanese exporters. Therefore, that's will pulling up the Japanese equity market. So I think all of these things are partly related to the Mr. Buffett's investment, but not always. And I think the trading companies are very unique. So I mean, these guys are very similar to the Mr. Buffett's funds as well. I mean, even you call trading companies, they are investing to many places, investing commodities, investing the new businesses and investing new frontiers. So they are actually investment companies. So in some extent, the Mr. Buffett's strategy is similar to these as trading companies. And I think one more thing I can tell you is there are 5 trading companies, and Mr. Buffett invested same amount to each. So 5 of them are now competing. So that's probably giving more sort of a boost to the change of the management. So I think in case of Japan, this kind of a competition or peer pressure within a group is probably powerful motivation to change anything. So from investors' point of view, I think one area you better focus is what is the rival of the industry or rival of the company within some group.
The global economy seems to be slowing down. Can Japanese export business sustain growth? What impact might this have on Japan's economy and market?
Yes, we still rely on the rather solid global demand. I mean, as I mentioned, our population shrinking 0.5%, and the corporate investment is, even though it picked up in last year, is still sluggish, and so we still need to rely on the external demand. And last year, when we talk about external demand, which is not the typical goods exports, it's a rather unique service export we call the inbound tourist. which is foreign tourists from overseas. That's we define the service exports. And that was definitely a support for Japanese economy last year, 2023. And we hope that will continue. And of course, and also Japan export a lot of autos and capital goods and many other materials. So if the global economy slows more significantly, especially if the US enters a recession or something, then we are really in trouble. So I hope that the global economy continue to expand at a decent pace, around 3%, as a case of the last couple of years. But you mentioned that it's slowing, but my observation is not slowing. I mean, just softish, but not outright slowing yet, at least.
As you mentioned earlier, when discussing the Japanese economy, it often associated with the lost decade and the challenge of getting Japan out from recession. What lessons can we learn from Japan's experience in tackling economic stagnation?
First of all, don't make a mistake that this amazing recovery for the last 2 years is because of the policy success or something. I don't say that the BOJ or government haven't done anything or something. Of course, they did it. I mean, weak yen due to the BOJ's aggressive easing was a part of the reason why this inflation dynamics changed. But at the same time, the lost decade is a combination of the several factors. Not only the demand side, which is coming from so-called balance sheet adjustment, and we had a significant banking crisis, and we got several big earthquakes, including a nuclear power plant accident. So, bad luck, mistakes of policies, and inevitable headwinds from demographic challenges. So these are the causes of those 3 decades, in my understanding. But only one lesson that I always emphasize to the Chinese clients is that if the policy reaction is timid and slow, the problem lingers and the things getting worse. I think the China can avoid their sort of banking crisis like the case of Japan, because their financial system in China is very structurally controllable. And in our case, deflation didn't start from the beginning of the 1990s. Actually, deflation started after the banking crisis. So once you get into the deflation, more strictly, deflation mindset, it's extremely difficult to escape from there.
Finally, how can the world work together for a better future? What will be the main engine for global growth?
Yeah, I think this is common for a global economy, that we definitely need more collaboration of the each country effort to reduce the significant risk of global warming or global geopolitical risks, or any other issues which related to everybody in the earth. I think that's the one thing we have to pay attention. We have to reduce the significant downside risk. No, it's not for the only economy, it's whole society. Actually, it's an issue of extinction of the human beings. So we not only Asia, but the whole country need to whole people need to pay attention. But on the positive side, or the plus side is probably what we have to do is to improve the productivity. We have to innovate new product, new services, and we get the better way to do the business, better way to conduct economic activities. So AI, artificial intelligence, is definitely an area that the people need to pay attention, and the people need to encourage to utilize in the right direction. Of course, this is a very dangerous technology as well. So that's why we need an international cooperation to manage downside of these new technologies. But probably that artificial intelligence is the generative artificial intelligence is probably the most important driver of the economic expansion in the world, not in just in Asia, but whole world, I think.
Thank you, Mr. Adachi.
You're welcome. Thank you.
As Mr. Adachi said, Japan's economy has faced tough times over the past 3 decades, and recent signs offer hope for a turnaround. We will continue to monitor the evolving economic landscape in Japan and its implications for global markets. That's all for today's show. Thank you for watching. See you.